Bitcoin has seen an explosive breakout resulting in a move to 57,000. In today's video, we are going to be discussing what this means for Bitcoin's macro price targets, how the 4-year cycle and macro charts are developing, and what we should be looking out for on the short term to catch the next move. Let's go ahead and dive in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an excellent day today. In today's video, we're going to be taking a look at the short term, the macro, the 4-year cycle, price targets, and everything in between. By the end of the video today, you will have a detailed understanding of not only what to expect on the short term, but how the macro charts are developing. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, you can join us in the VIP channel. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. Every single trade comes with, again, your exact entry, your exact target, and that exact stop loss, including a chart and detailed justification. Not only will you get access to that, you'll also get access to our group chats, our general chat, our trading chart and education chat, our trade setup chat, our news, our help, and our daily video chat. If you're interested in joining that, go ahead and contact us in the pinned comment of the free channel to find our entire trading track record and a video showing you what VIP is all about. We also do have a sale at the moment if you're interested in joining, with only 17 spots remaining. So go ahead and contact me for more information. Let's dive into the video. So starting on that market data, how are we currently looking? 24-hour volume is up a considerable 23%, sitting at 196 billion. As per 24-hour liquidations, we are sitting at a total of 315 million. This is up 27% in the last 24 hours, with a total of 136 million coming from long positions and 178 million coming from short positions. This tells me straight away that over the last 24 hours, we have seen a whole bunch of FOMO and a whole bunch of late longs into the market. If you were watching our channel and had been paying attention to what we've been discussing over the last few weeks, we told you we had a 10 or 12 day consolidation range over here, this horizontal consolidation range. We told you that during this consolidation, momentum was dropping. And although momentum was dropping, we were creating equal lows. This was a strong indication that the selling pressure created from this resistance was being absorbed at our base of support. And we told you that the moment we see momentum flip positive, that would spark a breakout of the $53,000 resistance, which was the high time frame resistance, which we can see on the chart over here, which would result in a strong rally upwards. And that is exactly what we saw, and we profited immensely from that move. So congratulations to everyone who paid attention. Now in today's video, we're going to be discussing this in a lot more detail, specifically focusing on this range over here, talking about what is happening here, what we expect to happen on the short term, and how this relates to the macro price action in regards to the weekly structures, the daily structures, and even the monthly structures. So before we get into that, we'll go ahead and jump over to the DXY and the S&P 500, and then we'll come back to Bitcoin. So moving over to the DXY, we can see not too much has changed here for the DXY. We still have broken down from that 2-month-long uptrend represented by that diagonal trend line. You can see the price action is now in a short-term downtrend. This downtrend originated from our 105 level of resistance. We can see the RSI is also broken down, so we do have negative momentum. We can expect volatility to reduce as we do approach again the 50 EMA and that lower level of support range, but we are still expecting a correction into this area of high time frame support at 103 to 102.8. If we do lose that level of support, that is when we expect a large correction for the DXY, taking us all the way back down to 101, potentially 105. However, support is support until it is not, so the most realistic expectation is that we do see a correction to 103. If we do see that correction, that should be relatively bullish for cryptocurrency and for the broader markets. Moving over to the broader markets, the S&P 500 is still looking relatively strong. Again, that 5,100 level is going to be acting now as a short-term psychological level of resistance as we are moving upwards now into these, price discovery ranges. It's very hard to tell you where our resistances are going to be. It's much more about adapting and analyzing on the daily basis, watching the reaction, specifically watching how the strength is developing to indicate whether or not we're going to see continuations or potential corrections. The most important thing is that when we are looking for corrections, we have to understand the macro trend is very much still in favor of a high time frame continuation upwards. So even if we do see these short-term pullbacks, potentially down to 5,000, potentially even back down to 4,800, we are still going to consider these as healthy retracements for the S&P 500 before we'd expect a continuation upwards. Again, guys, we do still expect a continuation upwards on the short term, provided the weekly candle can remain above 5,000. Only if we drop below 5,000 on the weekly would that indicate to me we've had enough selling pressure up over here to actually flip that trend back into a downtrend on the short term. However, until then, expecting continuations upwards. Moving over to the Dow Jones, we can see we are actually dropping below that $39,000 level on that weekly chart. Watching the reaction at that level for potential deviation. Deviation will result in the price action correcting back to that $38,000 support. At the moment, 2 days and 23 hours remain on that weekly candle, so too quick to jump the gun, more or less observing the price action. Enough about that, guys. Let's go ahead and jump into Bitcoin because we have so much to go over. So like we said, we are going to be discussing the short term, discussing what has happened, talking about what to expect next. We'll go over the higher time frame, the new levels of support, the new level of resistance, the targets we are looking out for, the current trend, and then finishing up on the macro charts, going over the total cryptocurrency market cap, and of course a 4-year cycle. Something particular is about to happen, which is very, very interesting. So let's go ahead and jump in. A quick word from Bitget and BingX first. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and dive on in. So taking a look at Bitcoin's price action, first and foremost, on the short-term chart and on the daily chart. We'll kind of talk about these at the same time. So like we said at the start of the video, we have seen a phenomenal move toward the upside for Bitcoin, breaking over that $53,000 level of resistance. As we've said in our prior videos, that $53,000 level of resistance was a level of short-term resistance as noted by the VIPV. We had this divot in the VIPV, which suggested an area of liquidity where we would generally find reduction in volatility and consolidation. We developed a resistance level here, retesting that prior high we did back in September 2021, which we consolidated for about 10 days as per the short-term chart. During this period, we had falling momentum as per the RSI, but we had equal absorption or buying pressure at our range low, which told us that the bears or the sellers were not strong enough to push the price lower. And when we saw them exhaust, okay, what's this momentum flip over here suggests the sellers have exhausted, it resulted in a strong move toward the upside. And after we see strong consolidation, we see equally as strong expansion. Remember, compression results in expansion. So with that move toward the upside, Bitcoin was able to clear through that $53,000 level of resistance. That means we have had a slight shift in our levels of resistance and support on the chart. This level now this $53,000 level turns into a short-term support. Remember, resistance when breaks becomes support. Support when breaks becomes resistance. To show you a perfect example of that, we can see we had a level of support over here in the past. We broke below it, we retested it for a level of resistance, and we saw that continuation. To show you an area of support, for an example, we broke through that 40k level, we came down, we retested it as support, we had that continuation. So prior resistance turns into support, and prior support turns into resistance. We're seeing that same thing play out now here, so we can assume 53,000 is a resistance. So what does that mean for Bitcoin? If we take a look at the past, what have we seen when we're broken through 50,000 before? Like we said in the past, we saw a huge rally when we broke through that $53,000 level of resistance in the past. So we are expecting a similar reaction in price action, looking for a first target around that $60,000 level. So what does that mean? We expect a continuation to 60,000 prior to any breakdown of 53,000. If we do lose 53,000, that would result in a possible continuation back to our high time frame support at 48 to 46. Remember, while we remain above 48 to 46, we are in this bull run starting territory. This is the territory of which the bull run will develop and actually initiate from. So this is a very, very key level to watch out for. We'll come back and discuss why 48k is so significant when we get to our monthly chart. So at the moment, the chart is looking fantastic. We are expecting something similar like this to happen. Not the correction part, but we are expecting a strong continuation upwards to at least 60 and potentially higher if 60 does break. We'll come back and discuss these local tops when we get to our macro analysis. But of course, like you know, nothing goes up forever. We've seen a large move toward the upside. We've seen massive amounts of liquidations. We've seen a whole bunch of FOMO at the top over here. And now we could potentially see a correction. So let's discuss on the short term what would happen if we see a correction and where the key levels you should be watching out for. So let's go over to the short term now, starting off on an hourly chart. So as we can see on the hourly chart, again, we've had this massive impulse toward the upside, reaching as high as 57,600. If we break it down to an even smaller time frame, we'll get a better understanding of what is happening over here. I might delete everything off the chart. So what we can see is we had a massive surge in volatility. We know we had a massive surge in volatility as the distance between the 50 EMA and the price action massively gapped. We generally start to see volatility drop off, and we can see volatility dropping off now because we have bearish divergences pop up, okay? And with that bearish divergence, we can see the price action tightening with the 50 EMA, suggesting again the volatility we saw from that rally is now starting to dissipate, indicating the large reaction, the large breakout we saw is starting to exhaust. Now that doesn't particularly mean we are going to see a correction, but it does indicate we could start to see some degree of consolidation, whether it be a sideways consolidation, whether it be a structural consolidation, meaning we developed some sort of structure, whether it be a falling wedge, a rising wedge, or whatever, before we get that next continuation, or whether or not means it's just a small break of the move. So we have to take a look at this at face value over here. So what we're going to do is we're going to go ahead and do exactly what we have been doing before, which is identifying, okay, the range of price action and the momentum within that range of price action. We go ahead and draw our trend lines across. We have got this RSI trend line. Again, we are taking these equal highs to equal low points and equal high on the chart. So again, this local high to this local high is going to be the trigger points we are looking for on the RSI. That does match up with a short-term downward diagonal resistance, as we've now seen 3 points of resistance at that trend line, and that trend line matches up with our RSI. So we can say within this cluster of price action, the momentum again has been dropping. So we have overall exhaustion in the strength as the price action has been moving upwards. Once again, seeing exactly the same pattern we have seen play out for the last 4 weeks, and only now people are going to start to catch on again. This is why it's fantastic to study momentum and analyze and understand how momentum works, as you can catch moves as they are developing. It tells you what are the buyers and sellers doing at the moment. How are they reacting? How are they responding? And how is that translating to the price action? More so, how can we understand and utilize that information to then assign probabilities to then execute and capitalize on the next move? So what are we seeing? We have, again, falling momentum. Okay, falling momentum as we have the price action rising. So this is developing some sort of pennant formation, but more importantly, we're not really interested about this trend line. We're interested about this trend line, as this is going to be indicative once more of higher lows. Okay, as momentum is falling, it is suggesting we have absorption. And with that absorption, if we see momentum flip positive again, like we did see in that prior structure, when we broke out that trend line, we saw a massive rally, we could see a continuation even higher. Again, watching for a pivot of that RSI to suggest that we are going to see a short-term continuation even higher. Again, if we do see that continuation higher, we are still looking for moves up to that $60,000 range. So for the bullish case scenario, it is relatively simple. The price action by all metrics is in a uptrend. What we are seeing now is we are seeing the uptrend starting to exhaust. We are seeing exhaustion as a result of not that we are seeing more sellers, but we're seeing exhaustion as a result of reduction in volatility as indecision starts to flood in, as late longs come in and early shorts come in. So there's a battle between buyers and sellers. So we're seeing this consolidation, this more or less sideways price action. And because we are seeing sideways price action after a large explosion, that is going to be representative on the RSI as reduction of falling momentum. Does not necessarily indicate weakness, because we do have higher lows, higher highs printing, which is actually indicating strength. So we have absorption in the price action, watching for that breakout for a continuation upwards. So let's talk about the bearish case scenario. Again, guys, for the bearish case scenario now to play out, we would need to see invalidation of this absorption, meaning we would need to create some lower highs. Okay, sorry, yeah, some lower highs. Should I say lower lows, sorry, on the price action, tongue twisting myself. Meaning we are going to be looking for breakdowns underneath these local low points. So this is going to be our sell side liquidity area. Okay, our sell side liquidity area. A loss of that level is going to indicate weakness, and we could see a move back down to we're looking 55,000. Okay, there's a local range of consolidation, and again, that could fill that VRPV gap. So even if that does occur, remember, even if we do see a loss of that range and a continuation into this level, we could develop a new base support before we continue upwards. Or if we lose that level again, we run the risk of clearing this vector area, which is going to be a low volatility range, or should I say a low area of historical resistance. Now, the likelihood of this happening is quite low, as we would need to break below our uptrending support. We would have to invalidate the absorption going on, and we would have to lose our local area of sell side liquidity for any of that to even develop. So it is quite low, but if that does occur, let's just say if it occurs, we have to understand what it means. And what does it mean for the price action? Absolutely nothing, as the price action will still be at support provided 53,000 hold. So overall, looking good, looking great. Let's get into the macro. So jumping over to the total cryptocurrency market cap, there is something I am concerned about on the short term. We are now retesting an area of major resistance on the total cryptocurrency market cap. This is going to be the resistance at 2.1 trillion. If we zoom out to Bitcoin's chart, this is the equivalent of this area of resistance. When I look at the total cryptocurrency market cap, I like to think it is lagging. So when I see this happen, okay, from that area of resistance, I like to assume we're going to see a similar reaction in price action, meaning we could now see maybe a few days, okay, a few weeks, who knows, of consolidation, of reduction in volatility, which would be healthy, would give the time for the market to reabsorb, okay, before we then see that breakout and continuation. So right now, a potential area where the market could put the brakes on, could slow down a little bit before we get that next move upwards. Keep that one in mind. Moving over to the altcoin market cap, again, looking fantastic. while we remain above this level of 500 billion to 460 billion, we are in a major area of support. We have this area of support. We are fantastic. If only we lose this level, we become very, very bearish. Until then, looking for a move upwards. We're looking for 630, 640 billion for a continuation upwards for our first area of resistance, and then looking for these local top points at 800 billion for our next areas of resistance. This could take many, many months to play out. There's absolutely no rush, and I wouldn't expect it to happen overnight. Okay, let's go over to the monthly chart. So like we said, there's another component of today's video, and that is going to be the monthly analysis. And we have got 2 days until that monthly candle close. And what we are seeing here is something fantastic that we have not seen before, which is a monthly candle close, potentially, very likely at the moment, as Bitcoin have to drop another $10,000 in the next 2 days, which is quite unlikely, and close under. But we're going to see likely that monthly candle close above 48,000. Now, 48,000, you've been watching the channel, I've been talking about it ever since all the way back down over here. 48,000 is going to be the dead cap bounce high, the dollar trend line, dead cap bounce high of the bear market, okay, which acts as a yearly level of resistance that we eventually do break above. Now, we usually break above this level after the halving. Now, whether or not we break above this level after the halving or before the halving really makes no difference in regards to the 4-year cycle. It's a 4-year cycle, once again, is a date range trend. The 4-year cycle is a date range trend. It cares very little for structural levels on the Bitcoin price action chart. It is purely an indication of a high time frame level of resistance when, if and when broken, we generally see a surge in macro volatility that lasts many, many months. So let's take a look at that. If we do a trend angle analysis, okay, a simple trend angle analysis from our absolute bottoms to that breakout point, and then from that breakout point to the all-time high, we can immediately see the angle of the trend, okay, significantly increases from around 20-ish to 30-ish degrees, to all the way up to 50 to 60 degrees. This signifies upon the breakout of the monthly chart, on that dotted trend line, we see a significant shift over the coming months, okay, which is going to be our bull market territory, okay, of volatility, volume, and momentum. If that is extended and massively elevated for many, many months, that is what we generally consider a bull run, okay? So that is going to be our trigger for the start, the official start of the bull run. That is fantastic stuff, guys. Very, very interesting. Now, I'd like to actually bring you to another point. If we go ahead and look at our prior highs, we have got our monthly high, our monthly high, our monthly high. We have in the past seen a rejection from that monthly high, which is sitting at around that $61,000 level, which if we come back to our chart over here, we could potentially see a rejection around that $60,000 to $61,000 level, which we discussed on the short-term chart. That could support the theory that we have a little bit of a rally upwards. We then see a pre-halving correction, however low that goes, and then we have that post-halving continuation into our bull run. Something to keep in mind. Definitely something I'm going to be considering moving into the halving. A potential pre-halving correction, only then to see a post-halving rally, which would then continue us into that bull run. Moving over to the RSI really quickly, because we are running out of time. A lot of people ask me, Whale, when are you doing, when are you selling, when are you taking profits, yada, yada, yada. Guys, I don't care too much about timing the exact top. What I care about is that I have a rough estimate of when that top will be in based on data, and I scale out. So when the top is in, I am majorly out in profits. That is what I care about. It's not about timing the exact top. You burden yourself massively if you give yourself that much pressure to sell 100% of your portfolio and one go on the exact day at the top. That is very, very hard to do. You'll be a deer in the headlights and likely you'll end up holding your bag. The best thing to do is wait for certain trigger points, wait for certain indications, wait for top signals, and start to slowly scale out so that if you don't get the exact top, or if you're a little bit soon, you still come out on top. What I am doing is I'm looking for 7 to 10 months after the RSI breaks the 80 point to then sell. So 7 to 10 months, meaning it's a 3-month window I expect the top to be in, and that will be 7 to 10 months after the RSI breaks the 80 point, in which I'll be scaling out of my positions. I'm not going to go into it in this video, maybe in the one tomorrow, we'll get into that in more detail. Moving over to this chart, before we wrap up the video, we can see that year 3 of the bull run is a fantastic year. Year 3 of the 4-year cycle is a fantastic year of the 4-year cycle. We generally see in the 3rd year, okay, we see a break of that prior all-time high. So we're still very much on course for that. That dotted trend line here is going to be that prior all-time high. Year 3, we generally see a breakthrough, up over here, a break through that dotted trend line. In the past, we have actually seen that happen at the end of the year. This time it's happening potentially sooner. Hard to say, we haven't hit it yet, but it's something to keep in mind. If history repeats itself, we do still expect that to occur this year. That opens us up to one question. Are we going to see an early bull run? What impact will that have? And will we see an early top? So to quickly answer that, just because we see an early start of the bull run doesn't necessarily mean we're going to see an early top. That is a massive assumption we can't quite make yet. And guess what? It doesn't matter to predict these things. Anyone on YouTube saying, oh, look, Bitcoin's going to go to 700,000, 200,000, none of it matters, because when the price action develops, when information comes in, you adapt, you react, you respond, you analyze, and then you adjust your positions accordingly. So I'm not going to sit here saying Bitcoin's going to X and X. It doesn't matter. Likely that information is irrelevant because we're going to get new information. It's going to change. What I will say, however, I'm watching what we have seen in the past from data-driven strategies, from situations that have occurred, and I'm saying, looking at what the RSI has done between that 7 and 10 month period after the RSI breaks on the 80 on the monthly chart, we then see the top print. So during that 3-month period, I'm looking to scale out. Thank you for watching. Hope you have a fantastic day. We'll get into more of it on the macro chart in the next one, and I'll see you guys then. Cheers.